Well, hi everyone, and thank you so much for being here for another episode of Conversations with Women Like Me. I am your host, Julie Fairhurst, and I am really excited today because Kelly is our guest, and she's going to tell you a little bit about herself. But what Kelly does for a living is quite interesting, and she is going to help to bring clarification to all of the confusion out there for all of us men and women that are wondering about what direction that we should go. So, Kelly, thank you so much for being here. And would you please tell us a little bit about yourself?
Well, first of all, Julie, thank you so much for having me. I can't tell you how much I've been looking forward to this all day long.
Good.
My name is Kelly Ketchen. I have three fantastic grown children. In fact, one of them just got accepted to UBC today, so I'm actually been a little excited
Oh,
about that. And
congratulations.
thank you. Thank you. I now have two at university.
Yeah.
And so I have three lovely human children, and I have two little fur babies. You may hear the little click, click, click as they walk along because they like to be near me. And I am very passionate about life insurance, specifically whole life insurance. I've been involved with it for about 12 years. I work with my sister Michelle and her husband. They own MacDev Financial. And it's just amazing how many misconceptions there are out there. So I am so happy to be on this so that we can clear up some of those misconceptions.
Absolutely. I think, and people get nervous when it comes to insurance, I think. Like I don't know, I don't know what it is, but I think it does make people get nervous.
I think it's because they have to actually realize that there could be a possibility of their mortality. And they just, if they can
Ah,
avoid it, then that means it won't happen. But unfortunately,
right.
like with my children in school or their activities, if something happened with one of the parents, and then the other parent, either they're having to drain the child's education fund, or they have to move because they can't afford the house, or they're setting up GoFundMe's, even just to afford the
Mhm.
funeral. And this
Mhm.
could so easily be avoided. And it's
Yeah.
not as expensive as a lot of people think.
Yeah. And it's nothing to be afraid of. I think it's part of life, and it's one of those things that we do need to plan for, especially for, if somebody has ever seen a family who the person who passed away didn't do any planning, and maybe they were the breadwinner or the long-term important person of the family. I don't know, but what a nightmare.
Oh,
Even
absolutely.
yeah, my mom passed away and she didn't have a lot of assets, but still, like, yeah, there's a lot of emotions with family and just everything that goes along with that. So it's good to have something.
Oh, absolutely. I mean, it's good just to think of this is my backup just in case. It's not saying it
Yes.
is going to happen, but it's just
Yes.
making sure it's a gift to your family of if something happens, you're still protected.
Yes. Yes, for sure. Yes. I remember actually when we were talking, my stepfather passed away many years ago, and we had to go to the government to get monies to pay for the funeral because he didn't
Yeah.
ha there was no resources there.
And like there is death benefits,
Yes.
but it's not a lot. And people
No.
like, I don't think people realize how expensive funerals. And you hear of some people going, "Oh, just put me in a box," and it's like, we can't actually do that. That's not actually a thing. Yeah, you could be in a box or cremation, whatever you want, but
Yeah.
there's still costs that go with it. And
Yes.
is this really something that you want to have as an additional burden on your family when
Yes.
they're wondering, well, how do we pay for food and how do we pay for rent and how do we pay
Yeah.
for living? And
Yeah.
now we've got this as well.
Yeah. Well, and I think what's really interesting about what you do is that, of course, you're in the business of helping people understand and plan for the future, for what might happen. But you also help people plan for other things other than just death. Because the types of insurance that you offer is so interesting because it actually can financially help you. I think is that the whole life insurance?
Yes, so the whole life insurance, and there's again, unfortunately, a lot of misconceptions with whole life.
Yeah.
And it did get a bad reputation in the 80s because everyone was really on board with, oh, we're gonna, just get, a little bit of term insurance for that just in case. But, the stock markets are doing awesome. We're gonna put all our money in the stock markets. And yet then you have things like, the crash of like 1989.
Mhm.
I know lots of, I mean, I was only a teenager, but there was lots of families that they lost almost everything in
Yeah.
that.
Yeah.
And, like my grandparents, they lost everything. And instead of retiring, they had to work. I mean, who wants to work when you're in your
Mhm.
70s?
Yeah. My sister's husband lost half his retirement in the stock market crash. Yeah.
Yeah. And in fact, whole life is how people used to do their retirements, like in the 1920s. It's a concept that's been in Canada since 1920. It's been in the United States since 1867. So it's
Wow.
nothing new. Oh, yeah, it's nothing
No.
new. But
Yeah.
unfortunately, it lost a lot of its traction when RESPs came on the scene. But
Ah,
but people retire differently in the 50s. Yeah, you had the housewife, and then the husband had his pension from work, and then the RSP would supplement that. And if he made a little extra, well, he just put onto his wife's income because she didn't make anything because she was a housewife.
right.
Don't live like that anymore. In fact, with you know, marriages being 50% in divorce, a lot of people aren't even married to pass on to, divide that income to a spouse. Whereas
Yes.
with whole life, it is income that is going to be there. It's not tied to the stock market. And unfortunately, a lot of agents don't do it properly.
Mhm.
So I've actually, on a side note, created a course to teach agents how to do it properly because the whole life, the benefits should grow. And you hear people going, oh, but it took me 5 years before I could take out $100. If you do it properly, it should be growing significantly faster. Like like from day one, you can borrow from it.
Do you want to explain? So if somebody doesn't know anything about whole life, can you like explain it to me like I'm five?
So you start off with like your death benefit. So I'm just going to use an example of one
Sure.
client.
Okay.
So this was for a 14-year-old girl.
Okay.
The parents did a death benefit of 50,000. Now they're not thinking anything's going to happen to their 14-year-old child. They're
No.
thinking this is money that is going to build. That child, when they were 25 years old, they actually had the death benefit had grown to 120,000. Now, again, that's not why they did it, but the child actually had $50,000 that they could use for their education. And not only
Yeah.
did they use it for education, she used it, she had opportunities with her dance troupe as a teenager, and she was able to use the money for that. She had opportunities for other types of travel. Her brother used it to purchase a car because he was in the film industry. So he borrowed from the money and was able to purchase a car that enabled him to get this job in the film industry, which was a very well-paying job.
Wow.
Now, some people they think, oh, well, it's a loan. Do I have to pay it back? No, it's kind of yes and no. We encourage you to pay it back. If you're taking it out as a retirement when you're in your 70s, absolutely not. Why would you do that?
Right.
When you're younger and you're making money, like for example, the boy that borrowed up for the car, he paid it back within about a year because he was making lots of money. But the beauty of it is, well, there's two beauties. One, you actually still continue to earn dividend interest, even if you've taken out the money. So he took out $10,000 to pay for a car. He was still earning dividend interest on that $10,000, which is
Okay. So explain how that works.
because so it's through dividend interest. And they still, the insurance companies, because it's a loan, they still consider, well, this is still, your money. You
Oh,
can,
because technically you're paying it back.
because you're paying it back. So it's still your money.
Ah,
It's still yours.
yeah.
If you did it as a withdrawal, then there's tax consequences. You're not going to
Right.
be making dividend interest. It's just not a good way to go. Whereas if you borrow from it
Yeah.
and then you pay it back, and the other beautiful thing is you don't have to have a schedule to pay it back. The brother, he paid it back in a year. The daughter, has not paid anything back because she's at university and
Yeah.
she's using it and she's like,
Yeah.
well, I just don't have any money because I'm in the middle of a BA. Well, that's not a problem. You can pay it back
Yes.
on your schedule. She could pay it back in 10 years. In
Yeah.
fact, she could never pay it back if she wanted to,
Yes.
and that's
Yes.
fine. But her funds are still going to accumulate and build even though she's borrowed that money. So even though, for example, the brother, he borrowed $10,000. It was
Yeah.
worth $8,000. He got interest, dividend interest, as though it was the full 20,000.
So one of our daughters, who is 25, she's interested. I've mentioned that to you before. So she's interested with her husband, and they don't have any insurance at the moment. But the really cool thing that I thought about that, because she is younger, is that by the time she's in her late 50s, early 60s, that's grown to like over $300,000, of which I think it was 220 or something like that, she could actually take out to live on.
Yes. And in fact, that daughter that I was telling you about, the one that's, used it for dance and for
Yeah.
school, by the time she's 90, it's worth $3.9 million. And
Wow.
remember, life insurance is tax free. Now, of course, she's probably going to be using that. I mean, it is going to be for her retirement,
Yes.
but theoretically, she will have access to $3.9 million. And she can access that in her, it would be less, of course, in her 60s, but, it's going to keep building and building and building.
Yes.
And she's
Yes.
going to have that money that she can
Yes.
use. So
Yes.
it's a great retirement home.
It's fabulous. And I know that you had mentioned as well that even babies, you can
Yeah.
start your young kids off on this.
Oh, absolutely. You can actually get one of these policies on a child as soon as they are 15 days old.
That's
And
incredible.
oh, it is. And I mean, the amazing thing with that too is like you're guaranteeing that, first of all, that they are going to have insurance for the rest of their life because whole life, as the name says, they have it for the rest of their lives, their whole life. It's not like term, which is just a short portion,
Right.
their whole life. So that child will be able to have access to money for university. They could have money for a wedding. They could have money for a down payment for a home. They could have, their retirement. And they also even are able to have a legacy for their children and
Mm.
their grandchildren. So,
Right.
for example, if you do a policy for your grandchild,
Yeah.
you're also leaving a gift for your great grandchildren and your great great grandchildren. And it just keeps going down. And of course, it's life insurance, so there's no taxes on it.
Right, right. And I think that the interesting thing is that the payments never go up.
No. And the beauty of doing it when you have a child is the payments are really, really low. And you can get quite a lot of coverage. And of course, it's building and building because again, we're not you doing this for the death benefit.
No,
We're doing
no.
this for the financial gift that you are giving your child or your grandchild.
Yeah,
And the payments will never increase, even if they developed a medical condition. And I mean, unfortunately, children do develop medical conditions.
yeah.
I've insured children where one of the siblings could qualify and the other one didn't.
Mm,
And, if they'd done it when they were younger, they still would have had that gift for both children.
right, right. I just think it's yeah, because I think I mean, what is the minimum payment that someone would have to make?
Uh, the minimum is 30, but I recommend 40 because it just has a better build to it if you can do it at least 40. You can go
So,
as high as you want it, of course, but I mean,
yeah,
for $40 a month, you're
yeah.
giving a huge gift to your child that's going to build for the rest of their life.
Wow. Yes, that's it just the whole thing blows me away. Because I had the life insurance, the term, and then 10 years later, it of course ends, and then I find out it's like triple nor
Oh,
quadruple the price. It's like
oh
I'm
yeah.
not paying that. I don't think so. And and the other thing, Kelly, that I was hoping that you could touch on is which is what brought it into my head is mortgage insurance versus yeah the life insurance. So somebody buys a house and they're
Yes.
sitting with their banker and their banker says, well, you got to get mortgage insurance on in case something happens. Yeah, no.
No.
So
So,
yeah, you go ahead,
so
explain that.
a lot of banks will make you think that you have to get their insurance. Now, you should have insurance because you don't want to be in one of those scenarios where if something happens to one spouse, that the other spouse is completely at a financial loss and financially devastated at
Right.
a time when they're already devastated. You don't need to compound that.
Yeah.
So, if the bank says you need insurance, would you like our insurance? You need to say no. And
Hmm.
like, just do not sign anything. You do not want their insurance. Their insurance is the mortgage insurance. It insures and pays out first of all, it pays out to the bank. So if anything happens, it just pays out to the bank. And there's actually some banks where because you've paid it off early, you have to pay the penalty.
Oh, I
And
never even thought of that.
I actually know of one family and one spouse passed away and they were like, "Oh, it's okay. We have insurance." But no, what they had was mortgage insurance. The mortgage was paid out and then the bank goes, "Oh, well, it's a shame that you just renewed your mortgage for a 5-year term because you have 4.5 years left. So we have a bill of $50,000 to pay."
Yeah.
And they actually had to take out a mortgage to pay off how they paid off the mortgage, which was just so sad. And they didn't need
Yeah.
that.
Yeah.
If you get term insurance, first of all, you get the money. So you can allocate it how you want. If you just want to keep making payments until the mortgage renews, you can do that.
Yeah.
If you pay it off and pay the penalty, you can do that. Um,
But the other thing, sorry to interrupt, but the other thing that I thought was not so great about the mortgage insurance is that if you start off with a mortgage of, we'll just use an easy number, $1 million. If you
isn't that,
start,
yeah, I
it's
know.
just an easy number. So if you started off with a mortgage of $1 million and you paid 500,000 of it off, but the mortgage is 1 million, or the insurance is to cover up to 1 million, but they're only paying out what's left owing on the mortgage. It's not like, oh, the mortgage, here's 500,000 to pay off that mortgage. Oh, and here's another 500,000 in your pocket. So
No.
actually your insurance, like like you're saying paying that same amount, but and every month it's less because you're paying less to the, yeah, it's just your mortgage, as your mortgage goes down, your insurance goes down.
So yeah, so if you have mortgage insurance, say you're paying $100 a month, just to keep the numbers easy. Say
Yeah,
you're paying $100 a month for mortgage insurance, your mortgage is decreasing, but you're still going to pay $100 a month. The
right.
mortgage insurance does not increase. Now, the other thing too, every time you renew your mortgage, you have to renew the mortgage insurance. So every 5 years, if you're doing the 5-year term, every 5 years you have to renew your mortgage insurance, which
Mhm.
means every 5 years it's going to get more and more and more expensive until you can't afford it.
Yeah.
Or the other scenario that often I have is, to be honest, anytime I've insured somebody and they've got rid of their mortgage insurance, it has easily been half of what they're paying to the bank. Plus, they
Mhm.
actually get the money. So I've had one client and they were a diabetic who were a heavy smoker. They were paying $500 a month to the bank. Goodness knows what it would go up to in 5 years after that.
Yeah.
I got them a policy for $250 a month, so half, and it was good for 30 years. He was never going to have to negotiate another, you know, term
Right.
insurance money
Wow.
again.
Wow.
And if anything happened to him, his wife would get that, not
Yes.
the bank.
Yeah. So I think what we're saying, because this is my real estate background, is why I find the mortgage insurance so interesting, because I, of course, was a realtor for quite a number of years, is that we're not saying don't get
Oh,
insurance.
no, no, no,
We're
not at all.
saying be careful what kind of insurance you are getting, and
Absolutely.
investigate and ask questions. Don't just blindly sign, because there's other options like the whole life investment is a much better option for your mortgage and even for mortgage insurance than it is to yeah, to be paying the bank. I know I had a client once and they were the husband and wife, they were selling and they both smoked and they were both not old, but getting a little bit older. And I don't remember but the exact amount, Kelly, that they were paying every month, but I almost fell on the floor.
Mm.
And I said, why don't you just stop paying that and just pay that on top of your mortgage? Like, that's outrageous.
Yeah.
I couldn't believe it. I was shocked. It was, I think, over $600 a month or something. I couldn't believe it. It was so much.
Oh, yeah. And especially like if you are in your 20s and you take out a term policy that's going to last you until I can get like a 30-year policy, except what it is, it's either 30 years or till age 65, whichever is longest. So
Ah,
you could be like 25 years old, take out one of these policies. So it's going to cover you literally for 40 years, and you can get about $400,000 of coverage for like about $25 a month.
yeah,
And
yeah.
that's going to be it. And you'll never pay more.
Yeah, yeah, yeah. It doesn't make sense to not do that. I think and I think when people hear those big numbers, about those folks that you knew and my ex-clients, no wonder they're afraid to talk about insurance.
Well, they think it's going to be really expensive, but
Yeah.
really it's not that expensive. And I deal with a lot of different companies. So you know how mortgage brokers, they find you the best price.
Yes.
That's what I do as a life insurance agent. I find you the best price. Some people, if they are a smoker, it will be a bit more.
Yes.
If you've got medical conditions, it'll be a little bit more.
Yes.
Again, the beauty of getting insurance when you're younger and you're healthy, you keep that for the rest of your life. And you could, be a very healthy 25-year-old and then get every illness under the sun and decide I'm going to be a smoker and this, that, and the other, and it won't increase.
That's just crazy that it doesn't change.
Yeah.
Yeah. Yeah. That's the way to go.
And
I don't even know why anybody would do anything else, really.
you want to be careful what insurance you get because there are some insurance companies, and actually a lot of mortgage insurance is like this, is they check out your medical history
Hmm.
um, after you pass away. I only deal with companies that do the medical beforehand. So if you get your insurance and then you get
Oh,
sick or have a heart attack or something, they may say, "Oh, we're really sorry, but you don't qualify anymore." There are some companies that are like
that
that.
makes sense. That makes
Yep.
sense. Yeah. So you've been paying and paying and paying and paying and paying and paying, and heaven forbid that horrible day comes and you're thinking to yourself, well, thank goodness we did a smart decision and bought this insurance only to find out, oh,
Yeah.
no, sorry.
Yeah. So you want to make sure the medical is done ahead of time.
Oh,
And some people, they get a little annoyed. It's like, oh,
yeah.
but it's going to take longer. It's just like, no, you want it to be
Mhm.
thoroughly done. You want it properly done at the very beginning
Yeah.
before anything happens.
Yes, yes, for sure. That I never even thought of that, but that makes absolute sense for sure.
Yeah.
And yeah, people, I hope that by our conversation we've, released some fears that people have and that, it's not life insurance doesn't mean you're technically you're planning for your death, but you're planning for, what might happen to your family or if you're one of the lucky ones, like my husband's grandparents who made it into their late 90s, well, you're planning for extra money for your retirement to help care for you in those years.
And that's why I like the whole life. And with the whole life, if you're 18 and over, I can actually do a combo with the term insurance and the whole life. So the term insurance helps the whole life to build up even more. And that
Wow.
is my favorite thing to do
Yeah.
because just watching like, because some people think, oh, I don't want to spend that money on life insurance.
Yeah.
But if you join it with a whole life policy, so it's like they're together, then it's not like you're really throwing your money away. It's still building for you.
Yeah, yeah. Well, when you were talking about the stock market, I thought, oh, should I tell my stock market story? And then I wasn't going to, but I will. So I dabbled a little bit in the stock market maybe 20 years ago or so, and I had all these stocks, and I went online one day and I couldn't find them, so I got a hold of my stock person, my investment lady, Vanessa, and I said, "Hey, Vanessa, I can't find those my stocks." And she goes, "Oh, just a sec." And she goes and she looks on her computer and she goes, "Oh, yeah, that company went bankrupt." And I said, "Oh, well, but what about my money?" And she said, "No, no, Julie, the bank, they went bankrupt. Your money's gone." And I remember when that happened, I thought, own a flippin' piece of property because dirt is not going anywhere, because it's gone. I'll never see it again. It's
Yeah.
gone. I thought, okay, thank you, no more.
Yeah.
But there's safer ways to go. I mean, sure, you can, if you've got the cash, you can make some money in the stock market, but you have to be aware that
That
one
it
day
could
you're
go.
looking for it and it's gone.
Yeah. So, like the nice thing with the whole life is it's stable. It will never go down. If it's worth, 1.2 million, it's worth 1.2 million. It will never reduce. And you can also borrow from it to buy that piece of dirt so that you can,
Yeah,
have both.
yeah. And so what happens if I borrow it and then I go, I don't really feel like paying this back?
You don't have to pay it back. So that, I mean, we encourage you to pay it
Of
back,
course, of course.
but
But
yeah,
there's nobody knocking on my door, making
no,
phone calls, sending
no
me
creditors,
letters.
no creditors, nothing like that.
Mm.
So there's nobody knocking at your door, and it doesn't show on your credit rating. So it's not on
Ah,
your credit bureau. So if you're gonna, buy a home, and
yes.
say you've borrowed, some money from your insurance policy, it
Yeah.
doesn't show up. So they're not going to say, "Oh, but you owe $20,000 on your policy. How much are those payments?" It doesn't show up. It doesn't matter. It's not going to affect.
Oh,
So that's
right.
a really nice thing. So you could even use it, borrow from your policy, maybe pay, tidy up your credit rating a little
Yep.
bit, maybe pay off your Visa, pay off your
Yep.
MasterCard, have it all looking clean, and then the mortgage broker will go, "Oh, this is amazing. You have like
Yeah.
you owe nothing. Let me
Yeah.
give you a great mortgage."
Yeah.
And
Yeah.
since your credit rating is so good, I can give you a better, rating on your interest,
Yes.
and
Yeah.
it's not going to show.
Right. Yeah. No, that's an added bonus as well. Wow. Well, Kelly, you are a wealth of information, my dear. Absolutely. And I hope that we've had lots of people, watching it, but I'm really encouraging, you work with men and with women, but I'm going to encourage all the single ladies out there that
Oh,
they should reach out to you and find ask them, get a what is it called? A consultation.
absolutely. I mean, like
Yeah.
women, we have to like, look after ourselves. We can't rely on somebody else to, the days of, being married and being looked after, that is long gone. And I
Yes.
wouldn't want that again anyways.
No.
But, this is a way to build your retirement. This is a way to empower yourself financially and make
Yes.
sure that you're looked after. And that's another thing I find so exciting is when I can empower a woman to feel
Yes.
that she is in control. Whereas the stock market, you're not in control.
Yeah.
This you are perfectly in control of at every single moment. If you
Yeah.
need that money to expand your business, you can. If you want to save it for retirement, you can. If you want to use it to buy a condo and just, you know, buy your own ring for
Yeah.
yourself. You
Yeah.
can do that.
I just got shivers when you were talking. I love it because I was just picturing, there's a lot of people that aren't getting married and a lot of people that are choosing to stay single these days. And I was just picturing that single woman who has empowered herself to be able to care for herself and have a nice life in her retirement.
Exactly.
Oh, it makes me almost teary-eyed. I think it's wonderful. Aw. Well, Kelly, what would would you like to leave our audience with? Is there anything that you want to make sure people understand? I'll just let everybody know if you're watching or if you're listening on the podcast, I will have all of Kelly's details, how you can reach out to her, her contact information in the details section. So you'll be able to go ahead and do that. And I encourage you to. She doesn't charge anything for consultations, and why not find out what she can do to help you? But anyway, but Kelly, what would you like to say to everybody?
Well, I'm located in the Fraser Valley, but I'm actually licensed in both British Columbia and Ontario. So
Aha.
for these consultations, I'm happy to meet in person. We can meet at your home. We can meet at a nice coffee shop. Or we can do a Zoom, I like to call it a Zoom tea, where we can get together. Instead of going out for tea, we can have tea at home via Zoom.
Yeah.
And we can just get together. I can show you scenarios. We can play around with numbers. I mean, I actually have an English degree. I majored in Shakespeare. Numbers was not my thing, but I don't know why. I just find it really exciting, like playing with the numbers. This is what we could do. This is what we could do, create.
Yeah.
And so I just love doing that. And I would just love to reach out to invite anyone who wants to get together and see how it could work for them
Yeah.
to, get in touch with me.
You love it because you're helping people create wealth
I
and
do.
you're helping to empower them.
I do. I just think it's great, because it's something we're not taught in school. And then you have people going,
Yeah.
well, what do I do now?
Yeah.
Let me
Yeah.
help you see what you can do now.
Yes, yes. Oh, that's great. Well, Kelly, thank you so much for being here. I've learned a lot, and I'm sure that our listeners and our YouTube watchers have learned a lot as well. So I encourage you all, reach out to Kelly. She doesn't bite. She's very friendly, as you can see, and you can have a cup of tea over Zoom. If you're in Ontario, I don't think she's flying out to meet you, at least not today. But hey, that's the awesome thing about Zoom. So you help people in British Columbia as well as in Ontario.
Yes.
That's beautiful. So don't be afraid, people. Reach out to her. So thanks again, Kelly. It was wonderful to have you here, and wishing you all the best, and hopefully we can chat again soon.
Sounds great. Thank you so much for having me.